Well, viewers, welcome to this video in the Sensor 360 channel. So let's take a look at what's happening in the markets and get an update from our weekend review. So here's the S&P 500 index chart. So let's start out with the recent swing highs, which was back in July. So since July, the market's been trending down. So we're definitely in a established downtrend. That's easy to see. And as this market comes down, so we've had a couple of points where it could have found support through here, so a little undercut, then bounce, but the bounce wasn't strong enough. And so we rolled over again. And then we came back and undercut the lows here and tried to hold them, but we couldn't, and then we've firmly broken down through them. So let's try and assess where we could end up going. So let's have a look at a couple of points where some of these have been covered before, and they will be covered in more detail at the weekend video. But I just wanted to kind of put an interim update out there. If we look at, so we have major support down here, and we're below the 200-day now. So we've busted through the 200-day, try to hold it, couldn't hold it. We have a long-term look to the left support zone here. We carved through that, and we've also carved through this key level here at 41.54. So from this point, we also have this box identified as a potential zone where this downtrend could end up. And now we can see, first we tested the top of the box here and bounced up, and now we're actually firmly within the borders of this box. So let's start kind of zooming out a little bit and look at where this could go next. So the obvious one is we do have a bit of a head and shoulders pattern that formed up here, and based off that and measured targets, then we're looking at around 40, 50-ish would be the target. So between 40, 50 and around, say, 40, 20, because you're never going to be precise to the penny. So between 40, 20 and 40, 50, if we find support there, then that's a target, and this could be multiple targets as we go down. The second target based on prior action is this box here, which has some coincidental zones. So this one would take us below the 4,000, slightly into the 39s, and we have a key level around 40, 50. Then we also have a trend line support at 4,000, and then 39.50. So there's a lot of support between 40.50 and 39.50 where this market could come into and find support. If it can't find support here and decides to carry on down a bit further, then as we zoom out, we have potential support zones around the 38.20 zone, 38.25, 30.35. And if that doesn't hold, which would be, then we're going to go off and start looking at the October lows over here. So this zone here coincides also with the recent March lows. If we bust through the March lows, then we're looking at the October lows, which would be a full-on retest back around the 3,500, 3,450 zone. Long way to go down to these levels. So let's focus on near-term action, and the near-term action is that we are at some support zones right now. So we would look for stabilization at these levels, like we tried to find here and try to find here. If we can't find stabilization and we still have some downtrending left, then we would look at 40-50 zone next and see what happens there. If we can't hold that, we look around the 4,000. If we can't hold that, 39.50. So lots of levels to look forward to as potential target zones. But let's take a day at a time, see what the markets do, because from a seasonality perspective, we are coming up to the end of October, and as we move into November. That's usually a time when the markets launch from a seasonality perspective. Okay, so that's a quick video update, and we'll go into this a little bit more depth over the weekend and see what the markets are telling us and showing us. Thanks for watching. Thanks for listening. Goodbye for now.